Welcome to the Dealreporter podcast. Hello, I'm Julie-Anna Needham. Dealmaking is getting interesting, with offers such as Volkswagen's bid for the remainder of Scania and a bid for SR Energy by its dominant shareholder turning hostile. Joining me to talk about one of those hostile offers, Scania and Volkswagen, is Alessandra Castelli, Dealreporter Europe's deputy editor. Also with us is Sofia Cerqueira to talk about IPOs. So Alessandra, firstly to you, Scania, can you briefly explain the background to this deal?
Yes, Volkswagen has made an offer to acquire the shares it doesn't own already in Scania at a price of 200 Swedish kron per share. And Volkswagen owns already 62.3% in Scania's capital and 89.2% of his voting rights, both directly and through the holding of MAN. So Volkswagen intention is basically to build a big truck group in Europe between the three companies, and so they want to buy out Scania's minorities to facilitate this.
We've seen Scania's independent committee recommending that shareholders don't tender, even though it's a big premium. Why is that?
Basically, the committee believes the offer doesn't reflect the long-term fundamental value of Scania and a fair share of the expected synergy potential of the company.
And the offer is set to close on the 25th of April. Can we expect to see any developments before that?
Yes, because some of Scania minority shareholders have already told the reporter they are working on coordinated approach with others, and they are still, in fact, evaluating the offer. And I think we could expect them to make their position clearer in the next few weeks. The question, though, remains still on whether Volkswagen will be willing to bump the offer or not.
And will these minority shareholders be able to block the deal?
Potentially they could, because Volkswagen, the offer is conditional to Volkswagen reaching 90% threshold, and that means that only with 10% the minority shareholders could block the deal, and it really depends on whether they're going to be enough shareholders to get together and to be on the same page to reject the Volkswagen offer.
And do you get the sense that this is a political issue in Sweden?
It is highly political, yes, because not only you have financial factors involved in this operation, but you also have non-financial factors, like the fact that Scania is seen as the flagship company in Sweden, for example. And also, Swedish unions are worried that the combination will impact jobs and investment in Sweden. And they're basically looking for written guarantees from Volkswagen.
OK, so plenty more to come on Volkswagen and Scania. Now, Sofia, turning to you, IPOs. Since Royal Mail floated late last year, we've seen a huge revival in the listing market. What's prompted all the IPO activity?
Well, it's a combination of factors. We've seen the confidence on the economic recovery, stability across Europe, and on the buy side, we've also seen high levels of liquidity. Investors, they have full pockets. They have been waiting for opportunities to invest their money. We see strong U.S. inflow as U.S. investors try to rebalance their portfolios towards Europe. And when you combine that with private equity activity, so private equity owners having survived the downturn and now looking at ways to exit their assets, you see that they're actually trying to get a better valuation through an IPO.
And what are the key sectors we're seeing activity in?
Well, retail has been one of the hottest sectors. They've been grabbing all headlines across papers. Poundland, for example, great example. It shows that niche retailers are particularly attractive. It bodes well for other names in the pipeline like B&M Bargains. And it's also interesting to look at tech-enabled businesses. So online retailers like AO.com, white goods retailer, their shares spiked more than 40% on their debut. And we see lots of other names in that particular space.
And geography, it feels like the UK within Europe is the most dominant market or the hottest market.
Yes, the UK has been the strongest market, but we see an uptick of activity across Europe. It's really interesting to actually look at markets like Portugal and Spain, where we haven't seen a single IPO in 5 years or 3 years. And now we're seeing some names looking at an IPO as an option. Scandinavia, it's also a very interesting market. It has a strong pipeline of potential IPO candidates, particularly driven by private equity again.
And what are the risks? We're not seeing that every IPO is a runaway success, are we?
No, not always. I mean, even though investors are looking for opportunities, they still want to look at the numbers, they want to assess the valuations, and sometimes it's hard to justify certain numbers when you look at the fundamentals. So we could argue that in some cases we could be getting into bubble territory. Not only that, but then you also need to take into account the the macro factors. Whenever there is political uncertainty, that could also have an effect on listings. For example, Lenta, the Russian supermarket company, they listed in London, they got away with it, but they were caught amidst the Ukraine crisis, and it hit their aftermarket performance. So other names like Metro Cash and Carry or Russian Detskimir, they will need to take that into account when they think of a listing.
And do you get the sense that fund managers are getting IPO fatigue?
They might very soon. It's really interesting because they haven't had any for a long time, and then suddenly they have all these names that they don't even have time to sit down and look at the research, meet management properly. So we're hearing some fund managers saying that they're actually passing on some files altogether because they simply don't have time to look at it.
Okay, thanks Sofia, thanks Alessandra, and thank you for listening.